Are you curious about what inflation is doing to the value of your home? Or are you considering selling or purchasing a home and you're wondering if now is a good time to do that? Have you also been thinking maybe there's a crash coming? Hi, I'm Eric Evie with HomeQuest Realty, and on this episode of Naturally NWA, I want to try to answer some of the questions that I get quite a bit here recently about the real estate market and how inflation is infecting it. So if you have any questions about that, stay tuned for this video. All right, everybody, so I am here with my good buddy Lee Robinson. Lee is a mortgage broker here in Northwest Arkansas. He's been in the business, since 2001? So Lee has seen a thing or two when it comes to, up and down and inflation and how that rides with the real estate market. So I thought Lee was gonna be a great person to pick his brain on what happens when we see inflation and what does that do to our real estate market. The first question that I wanna ask you, Lee, is this inflation that we're starting to see, is that going to affect property values?
I think the short answer is yes, but it already has affected property values. And inflation starts, and we were talking about earlier, in asset prices. And homes are considered an asset, just like stocks, bonds, and other investments. They're also not, the inflation we're hearing about now lately is from the CPI, the Consumer Price Index, which is goods and services.
Right.
And home units are not counted in that. So with low interest rates that the government's been trying to stimulate the economy for a long time, that's what's driven up asset prices and that's what's driven up home prices and caused inflation in assets. Now other things have come along and have caused inflation in goods and services.
Right.
And those are also going to translate to more inflation in housing prices. And so I think what people are worried about now is, you're getting some questions and it may lead into the next one about, is there going to be a correction with this inflation? I think it's going to get propped up by inflation. I think it's going to continue to be propped up by inflation because I don't think we've seen the end of it. It's not going to end this year. It's not going to end next year. I think we have several years of high inflation to come because the Fed's tool is to raise interest rates to fight inflation. And I don't think we'll see that. I don't think the Federal Reserve is going to raise interest rates fast enough, quick enough to stop inflation. Okay. They might slow it down a little bit, but they can't stop it because if they do, they're going to stop the housing market, they're going to stop the stock market for temporary. And that's what I think most people need to realize too when buying a house, that it's a long-term investment. Right. So if it goes down, it's always come back up. Right. If you're in the right area, the right market. So you need to look at your market and your micro, what's going on there. So when you buy an investment, whether it's a stock or a bond or a home, you might want to look at the market you live in and where do you see it in 5 or 10 years. Yeah. Because if you don't have a good outlook in your market, then I probably wouldn't be buying a house in that market. But if you have a market like we have here, then I think you have good opportunity still. Right. We've not seen the high end of the market yet.
Sure. The last 18 months in our market have really been an anomaly. People have been able to buy a house in late 2019, 2020 and sell it less than a year or like a year later, and those people magically were able to make money because of the shortage. That is not normal.
Yes.
Typically you have to stay put for 3 years at least to have some equity in your house. Our market has been, because of supply and demand, it's been out of whack. So some people have been fortunate enough to be able to cash in on only holding a property for a year or so and make a good amount of money on it. That is not the norm. So people, you should not plan on buying a house and selling it in a year with the thought that you will make money on it. It could happen, but it's not the norm. Is now a good time to buy real estate? And is real estate a safe investment against inflation?
Historically, yes, real estate's known as a very good safe hedge, a hedge against inflation even. Okay. It's also a hedge against your rents. Like if you're paying rent right now, rents are going up quickly. In some parts of the country, very quickly. Right. Like people are seeing, we're paying $1,500 now, or getting notices their rent's going up to like $2,000 and $2,200. So that's a huge increase in rents from one year to the next. Right. I don't know that we're seeing that here necessarily, but I know we are seeing rents go up. And they're going to continue to go up. Or if you buy a house and you get a fixed rate mortgage, your principal interest is fixed. Your taxes and insurance will go up over time, but not near as much as rents. So if you can afford that payment and you're comfortable being in a house for multiple years, then I think it's a good time to buy. Right. The last big recession we had, the one that hurt everybody, I think, felt from most parts of the country. We felt it here. It wasn't horrible. I mean, housing prices did go down, but that was because we were way overbuilt. Yeah. And I think the whole country's experience is, for the most part, is we haven't caught up with demand since we ate up all that shortage of inventory. Nobody's been wanting to build like they did before.
Yeah, I heard a statistic not too long ago that the growth that we're expected to see over the next 10 years, our population is expected to double in the next 10 years. in order to support that growth, another 175,000 houses have to be built in that 10-year period. I don't know where they're going to start building 17,500 houses a year. It's not happening currently. They can't build that many houses right now. We don't have enough subcontractors to do that amount of work here.
Yeah.
So it's, in my opinion, is demand should not go down because of the projected growth that we're expected to see. Housing prices aren't going to go down, or if you're waiting for a dip in the market for things to go back down, you're going to wait a really long time, it feels like.
Yeah,
because
you had to have what they call a black swan event, like something major. You know, if we had World War III broke out and it was prolonged for years, there could be some economic that affect everybody. And people stop moving and buying. There could be some things that happen. You can't wait around on buying a house or making an investment looking for you know, something that may happen once or twice in your lifetime, if it ever happens.
Right.
So
exactly. Should I hold out and hold on to my house, or should I cash out right now? Are we at the ceiling?
Yeah, well, even if we were, what are you going to do?
Good question.
Are you going to rent something? What's your rent going to be?
Right.
And so unless you're buying another house, or you're going to invest that money in something that's going to make you more money than that house and go rent somewhere because you just don't want to own a house and you think maybe I can go buy some stocks or crypto and do better than I did with my house, and I'd rather do that. I don't know why you'd want to cash out.
Yeah.
If you're comfortable with your house payment, you like where you live, then I don't know why you'd not stay put this area. You're planning to be in the area for a while.
Yeah.
Let's say I was planning to move in 2 years and I was concerned about things going on. I might consider selling now and renting. I mean, it might be a consideration. I think I personally probably wouldn't, because I think we're still going to be pretty solid. Especially, you know, if I was in a $700,000-800,000 house, I might consider selling now, because I do think those, you know, the higher end of the market could get a little slower and be more impacted by, you know, economic events and things going on around the world, the macro things. I think the affordable price range that, you know, I don't care what the economy does around the world, I think that's going to be strong here. I think it's going to continue to go up.
Right.
So if I had a, you know, maybe a real high-end house I might sell today, because I think it's, you know, be easier.
Yeah, I agree. I think if you're of the age where you're ready to retire and cash out, now is a great time to sell. If you don't have to sell, I'd probably hold on to it if it was me. Because once again, if the projected growth actually works out to be what they're projecting, there's going to be a housing shortage around here for several years, it feels like. Do you feel like with everything that's been building up, do you feel like a market crash is coming?
I don't.
Okay.
I don't think we're going to have a crash in this market. We have too much demand.
Yeah.
If the demand goes away and there's something that happens, like I said, some major event that causes demand to slow, I don't know what that would be. Because I even think as things around the country, if they get worse, well, from a macro level, like there's a recession, I think we could grow in a recession. So I think you're going to see more people want to leave larger cities.
Yeah.
What we've noticed during the pandemic is a lot of people are wanting to get out of the much larger areas. And while this is a fast-growing area and it's a good area to be in, there's about a little over 500,000 people in our metro area. And so even if another 500,000 move here in 10 years, we're still a much smaller market. We have great public schools. We've got very low crime rate. There's just so many factors about living in Northwest Arkansas that people we're kind of being found out now. We're just getting to where people are finding Arkansas. We've kind of reached that point.
Right.
So I think that's going to accelerate the growth. I think even tough economic times, we could see a strong market. Yeah. Where other places are not.
Right. That's almost like what I was saying a minute ago. Like, we're almost recession proof here. And I think that's kind of how it was in 08, you know, like other areas of the country, like it declined way faster and way more than it did here. Is that correct?
I believe so.
Yeah.
And especially like large markets like Florida, California.
Yeah.
They get killed compared to us here. But they've rebounded now. They're doing well. I mean, that's what people realize. Stocks go up, they go down. Housing prices can go up, they go down. It's a thing that happens. Now,
very good, Lee. I appreciate your time. Thanks for being on another episode of the show. And if you guys have any questions more specifically about our local market, have any questions for Lee, Lee's email address is
lee@mortgagenwa.com.
Shoot him an email. He's happy to talk about the market and things that are going on with the interest rates and the mortgage industry. He could probably even put you on a newsletter or something like that. I know I get stuff from you that's very educational. So reach out to Lee if you have any questions about our local mortgage market. And man, appreciate you again. Thanks for being on. Thank you guys for watching another episode of Naturally NWA. Once again, if you have any additional questions about the local real estate market, or want to get an idea of what your home's value is, or you want to know what interest rates look like if you're thinking of purchasing a home, feel free to reach out to me at the number below, or you can shoot me an email, or also you can visit my website at www.naturallynwa.com for more content and information about Northwest Arkansas. Also, don't forget to click on the subscribe button above so you can be notified when I put more content out about Northwest Arkansas. Once again, I'm Eric Eby with HomeQuest Realty, and I can't wait to see you on another episode of Naturally NWA. Thanks for watching.